Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell. Today is Wednesday, November 16th, and there's snow on the ground. I'm wearing my sweater. Christmas is coming. You see my Christmas village in behind. My wife and I put that together last night, getting excited for the season. What's happening in our local real estate markets? Let's start off today with a special report from RBC Economics. Beginning of the end for Canada's housing market downturn. I like the sounds of that. What is going on? Canada's housing market may be entering the latter stages of its cyclical downturn. We've been talking about this for a while. We've been seeing prices stabilizing. We've been seeing the interest rates increases slowing somewhat. The recent increase was only a half point compared to a lot of analysts who were expecting 3/4 of a point. Home resales rose 1.3% month over month. So we're seeing an increase in volume. Property values still coming down a bit, but last month's drop was the smallest since May. So we expect rising interest rates and loss of affordability will keep the market quiet in the near term, but this could be the bottom. It's a good time to buy right now, and it's always a good time if you're buying and selling, no issues. But if you're looking to get in the market and you don't have a property, it's a great time to get in right now. In terms of timing the market, I never really recommend trying to time the market. It's always a good time to buy real estate, but if there was ever a good time to time the market, it's right now. What else we got here? Easing inflation pressures. This is a big part of it. Easing inflation pressures in October draws the Bank of Canada closer to the end of the hiking cycle. So we know the interest rates, they've had 6 interest rate hikes this year, and that's really deflated the real estate market. But keep in mind, we buy properties, we live in the payment. With regard to investment properties, we're looking at cash flow. So rents are way up. Rents versus cost of ownership. Is it going to sustain and create a positive cash flow? But in terms of owning a property, we live in the payment of the property. So is the payment now versus in February, for example, at the market peak, is there much difference? The reality is at the higher interest rates, the price of owning a property right now in terms of a payment is very similar to paying the much higher prices back in February with the higher interest rates that are in place. But the advantage is, assuming you're making more money than your payment and you can chunk away at paying off the mortgage, you've got a much smaller price to pay off, so you're going to get it paid off a lot quicker. So it's a great time to buy a property right now. We're looking at the CPIs, the Canada Pricing Index, minimal changes month over month. This is really what the Bank of Canada has been looking for, and so we're expecting to keep interest rates in the restrictive territory, but maybe nearing the end of its current hiking cycles. This is good news, I feel, and we're going to see the market continue to be stable and start to increase again. So what is happening in our appointment center at RE/MAX Escarpment? Well, appointments are up significantly, 9% compared to last week. As November is starting strong due to a delayed fall market. It may be just 1 week of robust numbers. However, it could mean that sales could have a strong finish to the end of the year. So again, we're seeing the demand picking up. Right now, the appointment to sold index has risen dramatically from 16.1 to 27.3. This is very high as an influx of buyers re-enter the market. So right now, it's taking typically 27.3 showings to get a property sold. So yeah, very interesting. We're seeing a lot of buyers entering the market right now, and that's going to, again, supply and demand. It always rules, right? Supply and demand. There's a housing shortage. There's a lot of buyers. Prices are going to start going back up. It just makes sense. What's happening specifically in the Hamilton area? We've got 1,402 active listings, which is down slightly from last week. 439 sales in the last 30 days, which is also down a bit from last week. 3.19 months worth of supply. So about just over 3 months worth of supply in the market. We're seeing a median days on market of 21, an average of 30. So it's taking an average of 30 days right now to get a property sold in the Hamilton area. Buyers are taking advantage of the buyer's market that we're in. And we're seeing a median sold price versus list price of 95.31%. So that means that buyers are typically getting about 4.59 or 4.6% off the asking prices. And we're seeing a sales versus new listings ratio of 47.1%. So this is, again, indicating we're in a buyer's market. 50% is considered balanced. Over 50 would be a seller's market. What's happening in Burlington? Oh, and sorry, back to Hamilton for a sec. Median price point has gone up slightly, $725,000 compared to a week ago is $718,000. A week before that, $715,000. So the prices are starting to creep back up again. Burlington area, 425 active listings. We've seen 152 sales in the past month. Pretty similar numbers to last week. 2.8 months worth of supply, again, similar to last week. Now, Burlington, interestingly, sales to new listings is at 55%. So Burlington has actually tipped over to the seller side of the market again. And median days on market 25, average 31. So it's taking a bit of time to get a property sold. And with this 27 appointments to get a property sold, it's going to take even longer, I think, to really see those numbers going up, I would say, days on market. Sold price versus original list price ratio of 95.44. So buyers are taking about 4.5% off the asking prices on average right now. And compared to last year, the prices are down. Median price point in Burlington, $947,000, compared to a year ago was $1,082,000. Keep in mind, the peak was in February. So the market's down about 7 to 10% compared to a year ago, but down about 25, 26% from the peak in February. What's happening in Oakville? 360 active listings, relatively unchanged from a week ago. 115 sales in the past 30 days, very similar to where it was a week ago. 3.13 months worth of supply, so over 3 months worth of supply. Median days on market and average 18 days, average 24 to get a property sold right now. A little faster than Burlington and Hamilton, interestingly. Median price point, $1.3 million, compared to a year ago, $1,422,500. We're seeing buyers taking about 4.4% off of those asking prices. And we're in buyer's market territory. We've got solds versus new listings commenced at 46.9%, which is on the buyer's side of things for the Oakville area. That is it for your update today. If you have any questions, please reach out. Love to hear from my fans, and we'll see you next week.